The homeownership trap is the most successful psychological prison ever engineered for the middle class. While you celebrate signing a 30-year mortgage, the banking cartel celebrates your voluntary surrender to lifestyle inflation, locking you into a lifetime of debt-driven obedience. You have been systematically conditioned from early childhood, through television, public schooling, and parental societal pressure, to believe that purchasing a physical piece of property is the ultimate sign of financial maturity, safety, and personal success. In reality, it is a sophisticated anchoring mechanism designed to sterilize your high-velocity liquid capital, restrict your geographic and professional mobility, and ensure your absolute compliance within the corporate matrix. The modern home is not an investment asset. It is a highly illiquid consumer liability disguised as a wealth-building engine. From the moment you sign that massive deed, you are no longer a sovereign actor on the global stage. Instead, you are a biological collateral unit, bound to a specific geographical coordinate on Earth, forced to sell your life energy to service an artificial debt structure that benefits only the institutional state and commercial banking syndicates. The system requires your absolute stillness. A mobile worker is unpredictable, difficult to monitor, highly resistant to corporate pressure, and extremely agile in tax optimization. By convincing you to lock your entire net worth into a static pile of bricks and mortar, the Matrix achieves its ultimate goal: total behavioral containment under the seductive illusion of status and ownership. You become a prisoner of your own pride, guarding the very walls that keep you enslaved. You proudly show off the keys to a cage you must work 40 hours a week to maintain, blind to the truth that your home is actually owning you, draining your potential day by day. This is the baseline of sovereignty, recognizing liabilities before they completely drain your future. The real cost of mortgages. Let us analyze the clinical mathematics of this financial self-mutilation with absolute, cold objectivity. When you purchase a $500,000 property with a standard 30-year fixed mortgage at typical retail interest rates, you are not buying a home. You are buying a highly expensive interest-bearing contract from a commercial financial institution. Under fractional reserve rules, the bank did not even have that money to begin with. They created your loan out of thin air, writing a digital ledger entry and charging you real compound interest on imaginary capital. Over the lifetime of that 30-year contract, the amortization schedule is structured with calculated mathematical malice. In the initial 10 to 15 years, your monthly payments do virtually nothing to reduce the principal balance of the loan. Instead, you are almost exclusively paying front-loaded interest directly to the bank. You are subsidizing their balance sheet, funding their executives' bonuses, and bearing 100% of the asset risk while assuming all maintenance liabilities. Think about the hidden entry and exit costs: title insurance, closing fees, real estate agent commissions, transfer taxes, and escrow fees. These transaction costs alone strip away thousands of dollars from your net worth before you even step foot inside. By the time the 30 years have elapsed, you will have paid more than double, often triple, the original purchase price of the property when you adjust for interest, property taxes, structural maintenance, and home insurance. This is the heavy price of your social validation. The illusion of equity is instantly shattered when you adjust for the real rate of monetary inflation, the constant physical depreciation of building structures, and the endless capital calls required to keep a house from decaying. Every roof replacement, every electrical failure, every foundation crack, and every plumbing disaster is a direct drain on your liquid wealth, permanently preventing you from investing in assets that actually compound in value. You have voluntarily traded your high-velocity liquid capital for a highly depreciating physical structure, all while thanking the banking cartel for the privilege of doing so. This is not investment. This is debt-driven servitude disguised as a family legacy. Illiquidity and opportunity costs. The fatal flaw of the modern property owner is a fundamental, almost childish misunderstanding of the velocity of capital. True wealth is never built by locking your hard-earned currency in static, illiquid brick-and-mortar structures that appreciate at a rate that barely keeps pace with true monetary inflation. Real wealth is built through compounding liquid velocity, allowing you to deploy capital instantly to exploit market inefficiencies, purchase distressed assets, and capture high-yield opportunities during economic downturns. In the markets, we often speak of volatility as a fee you pay to capture higher returns over time. But the homeowner is so terrified of short-term volatility that they gladly pay a much deadlier fee: the permanent sterilization of their capital. When you place your liquid savings into a home down payment, that capital is permanently frozen in place. It is dead. You cannot eat your walls, and you cannot use your foundation to purchase undervalued assets during a sudden market panic. Real estate is notoriously difficult to liquidate during recessions. In fact, it is exactly when you need money most that the property market freezes completely, leaving you with paper wealth but zero actual liquidity. To access that locked equity, you must either sell the property, incurring massive transaction fees, agent commissions, and moving costs, or take on more debt through a refinancing mechanism, placing yourself even further under the bank's thumb. While your capital sits stagnant in a house, the opportunity cost accumulates silently like a hidden cancer, destroying millions of dollars in potential compounding returns that could have been achieved in high-yield vehicles, private equity, or strategic liquid allocations. The traditional financial industry keeps you completely blind to this trade-off because they profit immensely from your illiquidity. A liquid investor is dangerous. They are sovereign, agile, and capable of exiting the system at any moment. An illiquid homeowner, however, is perfectly docile, anchored by property taxes and municipal liabilities, unable to walk away from a hostile high-tax jurisdiction or an oppressive local regime. They are owned by their location, measured by the system's favorite slaves metric: credit scores and outstanding debt balances. Mastering this specific wealth matrix requires automated tracking tools that the traditional system intentionally hides from you. I have left the exact asset management software I personally use to audit my capital pinned in the description below under the name Capital Matrix Tool. Upgrade your system now before the next volatility cycle. Geographic and financial freedom. True sovereignty is geographic and intellectual fluidity. In the 20th century, physical land was a symbol of security. In the 21st century, physical land is a stationary target for predatory taxation, regional economic decay, and institutional control. When you rent your residence, you are not throwing money away. You are paying a flat, predictable fee for the supreme luxury of agility. You are transferring all structural depreciation, maintenance liabilities, and local tax risks entirely to a landlord who is willing to bear them in exchange for slow growth equity. If a neighborhood decays, if taxes spike, if localized violence breaks out, or if a superior economic opportunity appears across the globe, a sovereign individual exits their lease in 30 days and relocates. A homeowner is trapped, forced to witness the slow erosion of their life savings as local politics, failing school systems, rising crime rates, and economic decline devalue their static asset. By maintaining absolute liquidity, you retain the leverage to reallocate your capital to whatever jurisdiction treats you best, permanently escaping the geographic prisons of the corporate state. The modern sovereign does not seek to own physical dirt. They seek to own high-yield cash-producing assets while maintaining a frictionless, low-overhead physical footprint. Renting is the ultimate leverage for the intellectual elite. It is a strategic arbitrage that allows you to live like a king while maintaining the light footprint of a shadow warrior. You must realize that physical possession is not control. It is merely an anchor that prevents you from reaching your true potential. By freeing yourself from the geographic slavery of a 30-year mortgage, you gain the ultimate competitive advantage: the ability to move at the speed of information, shifting your physical and financial footprint to wherever you are treated best. The false equity trap. Let us dissect the psychological delusion of home equity. The banking cartel tells you that as you pay down your mortgage, you are building a valuable nest egg. What they omit is that this equity is completely non-productive. $1 million of home equity generates exactly $0 in passive cash flow. In fact, it does the exact opposite. It continues to demand constant cash inflows to cover escalating property taxes, maintenance costs, and insurance premiums. Property taxes are a permanent rental fee paid to the state. If you truly believe you own your home, try stopping your property tax payments for 12 months and see how quickly the municipal government confiscates your sovereign castle. You are merely a glorified tenant of the state, paying interest to a bank and taxes to a city, while bearing 100% of the operational liabilities. Furthermore, you do not actually own the home until the very last check of your 30-year mortgage clears. If you experience a financial crisis in year 29 after making 348 consecutive payments, and you fail to make your next 3 payments, the bank will foreclose on your home without hesitation. They will seize your equity and sell your dream to the highest bidder. The equity you accumulate is a golden cage. locking up your purchasing power in an asset that cannot be easily spent or reallocated. When you retire with a fully paid-off home, you are asset-rich but cash-poor, forced to sell your home or take out a predatory reverse mortgage just to survive. This is the final joke of the homeownership trap. After 30 years of sacrifice, you are still a slave to the physical structure, desperate for liquidity in your final years. Your net worth on paper means nothing if you cannot deploy it to capture real-world yields. Renting for sovereign power. The ultimate choice is between submission and sovereignty. Will you choose the predictable, heavily taxed path of the static homeowner, anchoring your life energy to a single zip code while funding the balance sheets of commercial banks and local governments? Or will you choose the path of the sovereign capital allocator, utilizing renting as a strategic tool to keep your capital fluid, high velocity, and globally mobile? The system fears the mobile, liquid investor because they cannot be easily controlled, taxed, or coerced. By rejecting the homeownership myth, you permanently reclaim your life energy from the institutional matrix. You free yourself from the psychological need for physical validation, turning your wealth-building engine into a high-speed vehicle for true autonomy. The world is shifting rapidly, and the static structures of the past are crumbling under the weight of systemic volatility. The future belongs to those who travel light, think globally, and keep their capital liquid and ready for instant deployment. Realize that true safety does not lie in a pile of bricks, but in your ability to generate yield independent of any single location. Audit your life, calculate the real opportunity costs of your housing choices, and decide if you want to be a static debt slave or a mobile sovereign actor. Break the physical chains that bind you to the soil. Trade your illusion of security for the absolute power of mobility and liquidity. The choice is yours, but remember, the clock is ticking, and the system is always hungry for more collateral. Do not let them turn your life's work into their physical asset.